Hey there and good afternoon. This is Trader Tim from eminimine.com and I'm doing a Monday market analysis video here for the E-mini S&P. I also want to touch on some bigger picture swing trades towards the end of the video, so stick around for that. As I first came into the day today looking at the ES on the daily chart, the pattern that I'm seeing is a ascending triangle where we have a vertical or a ascending series of lows that are getting higher. So we have higher lows, but at the same time we have a high that's more horizontal, sort of like a ceiling, like this. Thus, you end up with sort of this triangle that is rising, making higher lows, but hitting its head on the ceiling at about the same level. So as we sold off today in the morning, my thought was, watch out for that intraday reversal where we end up with, just this. We come down to kind of the low from this bigger body candle. I wouldn't say that all of these candles were inside. We poked above this original candle on the 24th. We poked above its high last week, but by and large, most of the trading that has been occurring over the last 4 days has been inside of this candle. So we poked below lows just briefly, and then we headed upwards. And down at that point, there was a small retracement on the 512. It happened really quickly. I wasn't able to get in the long, and then we didn't get another pullback on the way down, um, or on the way up from lows. But I'll walk you through here the short trade that I did have. So bias for the day, thinking there will be some selling and then an intraday reversal. You end up with this hammer pattern. We're getting awfully close to breaking out of this triangle, and we should be able to take the distance of the start of the triangle, so roughly 3,500 up to, we'll just call it 3,650 for round numbers, 150 points, and we should be able to project that up from the high, we'll call it 3,650, up to 3,700. And our negative 23% target from the daily long is just above that at 37.36. So going into the end of the year, I'm looking for us to break up into new highs and kind of work our way towards this negative 23% target. One of the things that I feel like would be very unexpected would be a stimulus package that gets passed, and folks who are hurting for cash or don't have jobs or are losing their unemployment benefits might be getting a Christmas check. Something like that sounds pretty far-fetched to be pushing that through and turning that around between now and Christmas, but I like to think about some of those, unlikely or not very on the forefront ideas, because if something like that were to occur, that's the kind of catalyst that can really accelerate the market. So if you try to expect the unexpected as best you can be positioned for some of these really big moves. If, however, we break the uptrend support, something like this, then a break of like 35.85, somewhere in that area, then I would look for us to come down and retest the 50% again. So let's look at that intraday trade here. The way I had it drawn up was a full halfway back short. So even though we rallied off of lows, we came up and made a nice clean touch of the halfway back of the day, just taking the high of the day to the low of the day. And you can't ignore that. You really, whoops, let me turn on a little trick here is if you're on toss, if you change your drawing set, you can have a bunch of different names. So if I make it the same drawing set that's on the left as the right, then if I have two of the same ticker symbol on my chart, they'll cross over. So I got my 15-minute chart, that I have the retracement drawn on, just a little easier to see the whole frame. Then I can come over here on the 512 and it's already there. So we rallied up to the halfway back short. We broke the swing low here, and it wasn't a true double top, but we had a nice swing low that was defined between these two high points. So I just draw the high down to low, and then enter at the 50% short, and then from there just trailing the next 61.8 like so, trailing my stop, meaning bringing my stop down above this 61.8 here by a couple of ticks, then trailing the next 61.8, and then the third one dropped all the way just about to the negative 61.8. So we have the 50%, the 61.8, which occur on pullbacks, and then we have the negative 23.6 and the negative 61.8 that are sort of projecting to new lows in this case. So when I have a strong sell-off and we get just about to the negative 61.8, or if I just see the market really diving off a cliff and I don't want to leave my stop above the full halfway back, above this 61.8, I can draw from lows. So instead of drawing from the swing high, I'm drawing from the swing low down to lows. You can see there was a little bit of a sell-off there, but that's what put my stop above this 61.8. And so now you're down at 35, 98.50, 98.75, somewhere in that range, versus up here at 36.01 or 36.02. So that was the short setup from today, and then that was the only ES that I had. I did want to switch over to the daily chart here quickly and just mention that if you are, so I've been hesitating on, I guess that's not a very good word to use here with the day trading context, but I've been putting off, also not a good word, I guess, because I'm talking about buying puts on the SPY. So I've been holding off buying puts on the SPY because I think we have room to go higher. And if we can get to this negative 23% target, that's where I'll look to put on my hedge for to lock in or to protect some of the gains and protect longer term positions that I'm not really planning to sell out of. I'd rather just collect the dividend and then use those puts as my hedge to collect the gain, the short-term move down. Then if you're ever sort of scratching your head at, when during the day should I be putting on these longer-term positions or should I be adding to a position? I prefer to always do it at the close within the last hour of the day. And there's going to be a few instances where the market makes a intraday reversal and you end up with a hammer, and had you bought over the lunchtime session, you would have been buying a little bit lower and get a little bit better price. But by and large, to keep the to have a clean and simple approach to adding to long-term positions, I just like to do that within the last hour of the day. You get a little bit more context. You can kind of see the shape of the candle, developed for most of the day. And if we are looking to break out like we are today, you can get in a little bit ahead of tomorrow's price action. So any questions, feel free to drop them in the comments below. I hope everyone has a great week of trading, and we'll talk to you soon.